we like teams that have both business savviness as well as tech savviness. A lot of founders will be either tech savvy or business savvy. So if you're one, I would recommend finding the other. And so that's when you walk in the room, you're like, I got the business side covered, marketing, sales, so on and so forth. And I got the tech side covered, and whichever side you are.
You're listening to the Web3 Creators Podcast, where we speak to the brightest minds and builders in crypto, DeFi, NFTs, and the metaverse. Our goal is to give you the absolute best tools for building a thriving business in the Web3 space. Now, here's your host, Hernan Arber. Let's start creating.
Creators, welcome back to a brand new episode of the Web3 Creators Podcast. Today, we're going to discuss very important things on the financial markets. And I have with me, nonetheless, the best person I can think of to talk about some stuff. Enzo Villani, how are you, my friend?
Hey, how are you? Good. Nice to see you.
I think I lost you for a minute. I lost you for a second on the sound.
Is the sound working now?
Yeah, now it's working. It was just...
Okay, I'm not okay. So so thanks for having me on. I appreciate the time.
Yeah, no, it's a pleasure having you. And so I know we've rescheduled a few times, and I finally can have you here in the pod. So you're running. It was Alpha Sigma, or is it Alpha Transform?
It's Alpha Sigma Capital, and we have a parent company called Alpha Transform now. We formulated the parent company so that we can launch two more funds. So when I launched the first fund in 2020, it was just the one fund. And now that fund is about 3 years old. And now we're launching two new funds. One is the Alpha Liquid Fund, and then the Aegean Venture Fund. So I created a holding company called Alpha Transform, where Michael Turpin and I merged some of our assets together, including my acquisition of Blockchain Wire, which is part of a parent company called Content Syndicate. It basically is, the goal is to create a company that has three legs of the stool. One is going to be capital. Second is content and actually distribution of content and research. And then third being advisory. Our goal as a company is, in the crypto markets and blockchain markets, a little bit different than pure venture. So we believe that we can work with our portfolio companies throughout their journey. So not only invest in seed and Series A, private equity rounds, or seed token sales, or buying nodes and so on, but because they also trade as tokens, we can also really kind of offer them even more capital as they start to grow throughout their journey. And then even have the advisory team help them from, really management consulting, kind of token economics consulting, advise them through their strategy, all the way to potentially some type of exit as they start to grow. So we run.
I don't think we've seen a lot of that in the crypto space. I think it's still young for being, going through the public listing and exit path. Maybe Coinbase probably
is the only one right now, right? So prior to the implosion of the TradFi kind of crypto companies such as Celsius and Voyager and, of course, FTX, we thought that more companies would end up going public. I do think that's going to be a longer life cycle now. I do think that there is a good opportunity to take some of these companies public, maybe on the NASDAQ and the New York Stock Exchange, but really also on TSX. You see a few very good, solid companies on the actual TSX exchange, such as Galaxy. You do see Coinbase, right? You do see other companies that potentially are much smaller companies. Like, we just met with a company that is a metaverse Web 2.0 company that's listed on the NASDAQ small cap, that is entering Web3. And we're going to help them potentially do that. So the way we look at the world is, there's a tremendous amount of opportunity in seed financing and so on. But we have to also look at where is the ecosystem going. And there are going to be other opportunities such as consolidation, or the acquisition market, or the M&A markets starting to open up between Web 2 and Web 3 companies. Because Web 2 companies have the audience, they have revenue, but the Web 3 companies also have actually revenue, but they have a much smaller audience. So I think the bridge to mass adoption will probably have to do with some of those companies maybe combining or one acquiring the other company and so on. Depends on the ecosystem.
Do you think it's strictly a matter of more adoption in terms of the user base and the reach of those companies? Or do you think there's a certain pushback on the type of crypto companies that maybe also have a token that are tokenomics based, and maybe the world still doesn't know how to, handle that on the public markets? Do you think there's some of that too?
It is all of the above. So
Right.
you are looking at the SEC in the US is having a hard time dealing with stable coins. Now they're having even a harder time with the banks in general. So I see this. So I know this is happening today, which is a really interesting day for us to have this podcast, because this is the day that I'm seeing Bitcoin decorrelate from the S&P and the Dow Jones Industrial Average, which, as a TradFi person who entered this space for many reasons, that was one of the reasons why I entered. Bitcoin to me is the reserve currency. It is the reserve currency of our market, our financial markets, the crypto and the blockchain financial markets, from, decentralized finance to gaming, play to earn, staking, lending, all of that. The transparent smart contract network is much better than the opaque, you have to have a PhD in finance to understand whether your bank deposit's safe world. And what's interesting right now is today,
Not even PhDs are safe in what's happening with Silicon Valley Bank and Credit Suisse.
right? You would never know a normal depositor who is just, anyone who's just trying to make a living and they want to make sure that their deposits in the bank are secure. For them to understand the balance sheets of these organizations is not even clear, and even the regulators can't do it. But we know, as in the crypto world, that when FTX started going under, or they were having challenges, it was happening real time on Twitter. We were watching them hack their wallets. We were watching everything happen, for good or for bad, in real time. And what's interesting about that transparency is the crowd, and the crypto crowd's not that big, but the crowd started to wrap around and say, this is a problem. This is happening. As opposed to, we find out on Friday, and then we wait the weekend, and on Monday, your money's not there anymore. So
right. And there's a there's a bit of a, when everything's on chain and you lack a money printer like the TradFi system does, when things are going down, there's no way to sugarcoat it or portray it as business as usual. I think the government's trying to paint it.
And that's true. But you'll also catch things quicker. And I also do think that if you took DeFi technology, just the technology, the tech stack, and let's separate it from all of the experiments that are happening. I mean, really, a lot of these DeFi staking algorithms and lending and it's new. It's brand new code. And code always breaks, first of all. And the fact that we believe in the code and there's a concern there, right? And around decentralization and making things decentralized as opposed to kind of seems like it's decentralized. But first of all, nothing becomes decentralized overnight. Not possible. It's impossible. So
nothing is completely, fully 100% decentralized. It's a range. It's never a 0 or 1.
Right.
People, especially in crypto, want to say, this is centralized, this is decentralized. And it's actually a range, it's a broad range between 0 and 1. Not even Bitcoin is 100% decentralized.
But let's just take the DeFi tech stack. I've been in the financial technology markets for 25 years. Okay. So as a technology, if you just take that tech stack and you applied it to the financial banking sector now, and you don't even have to have it be external. Like it wouldn't have to even be a public chain, but the regulators could see every day what was happening at SVB or at one of these other banks. And they could have automatic, like the way we have alert systems, we have algos that look at things constantly and say, oh, well, this, the TVL is dropping below this. Is there collateralized? Are they going to be, actually kind of collateralized, properly? Is it going to make, we saw the DPEG of DAI and USDC in real time over the weekend.
Mm-hmm. Well, right? but if it would be on chain, maybe, that would go against the business model of those big banking conglomerates, that we know for sure that have been operating for years with kind of impunity and a bit of obscure practices. I don't know how to call that, but
the banks are going to have to rethink their business model anyway. I just spoke to, I don't want to name anyone because he is a very senior person who has done banking mergers at very large investment banks for the last 20 something years. And we were talking about this, and he's not a believer. He's not really a believer in any Bitcoin. He's like, he thinks Bitcoin's hurting. I'm like, no, it's not crypto. This has nothing to do with crypto. And I was having a conversation with him about it. And basically what I said to him, I was like, the financial system that is financial 2.0 is kind of broken. And the only real financial system, and that's why Bitcoin was invented, the only real financial system is transparency. And the only real financial system that is going to be something where the confidence of the financial system is going to be real in the next, going forward. We had 2008, and now it's 2023, and they still have caused a contagion. They cannot, even on all the rules and the SIB banks and all of this kind of regulation, they still had a problem. And it was mostly because the government raised rates too quick, which is whatever. I'm not a government. I'm not a macroeconomist.
And before that, it printed tons of money, right? Because to
and then you're printing money, right? So the COVID hangover was going to come some point, but and I know that they were trying to make it a soft landing, but unfortunately, what I'm saying here is that our financial system, let's say I'll call it the new financial system of crypto or DeFi or just transparency, decentralized transparency, let's say.
Yeah, I think a solid financial system needs to be based on a level of trust. Like the monetary system is only as valuable as the people who use it have trust in it, right? Without trust,
that's right.
The system collapses, as we're seeing now. And so I see that you're inferring now that after this, what we're witnessing with all these bank failures, you're inferring that you foresee that the new financial rails are going to be based on crypto and open blockchains. Is that even possible?
I actually think I do know that JPM has a DLT system that they've implemented. They've even talked about it. Obviously, I know that the DTCC, which is the back end clearing and settlement system in the US, has some type of clearing and settlement system, which is DLT. I that's okay, but what I'm saying is that I think that the banking sector and the financial sector have to look to what we've created in crypto and blockchain, look at the tech stack, and understand that this might be the only way, the best way forward to build trust back into the banking system, is that you need to have transparency that is going to be simplified. It's like, it's like putting the nutrition facts on the back of a carton of milk. Like, is my bank solid or not? And it should be. And we shouldn't have to watch it as a depositor, or my friend who runs a bunch of like Italian kind of shops for food and stuff. He shouldn't have to worry that his bank's not going to be there, that he can't make payroll. He's doing what he's doing. So they have to find a better way. And I think our technology that we've invented, and not me actually personally, but the blockchain,
we as an industry,
we as a kind of industry, I think they should look at our technology and they should say, let's adopt it, because
they've been looking at it for like 10 years. They laughed it off for a few years. They are fighting it vehemently, especially now with kind of the closure of it was Signature, because Silicon Valley Bank, like after its failure, the closure of Signature Bank wasn't due to their illiquidity or insolvency. It was actually a government, going after kind of crypto-friendly banks, let's say. What people have called like Operation Choke Point. That's how it's being called. And they're trying to cut access, right?
Barney Frank admitted it. He was quoted saying this in the Operation Choke Point of choking the crypto sector. Why are you trying to choke the crypto sector? It makes absolutely no sense. You should be looking at adopting the technology and utilizing it. It's really good technology, and it's been developed by thousands of developers across the world, some of the smartest people on the planet that you as a government could not even hire if you wanted to.
And it's not going away. Maybe it will leave the US, but it's a global, open, transparent technology that's never going to get away. It's only moving forward. So, the question isn't the United States choking itself by restricting the access to cryptocurrencies?
What's interesting to me is that, and I'm a US citizen. I don't want to leave. I'm not looking to I'm not a basher. I'm more of like, when I worked at NASDAQ, we looked at technology all the time. That's all we did was look at new technology to make things more efficient and better. What is this idea of not looking at a technology because it wasn't built by you? I mean, this is insane. This technology was built by thousands of people. The systems are running. These networks are running. Ethereum did $2 billion in revenue in the last 360 days. That means there's revenue generating. We see these companies are generating actually revenue. We see that people are utilizing this. Why are you not adopting it? It makes absolutely no sense. And the banks should be looking to adopt it because there's no reason not to. And if they want to put KYC rails on it, that's not that hard to do. If they want to, regulate it. I've been working in the regulatory industry in regulated environments for 25 years. I built software in regulated environments, compliance products. I've actually built compliance products. So there's not a problem. You just have to set some rules. It's okay. And you'll have a flourish of unbelievable banking opportunities. I mean, this is another thing that I thought was really interesting. I looked at a platform. I don't know if I should mention. I don't know the company well, so I don't.
We have the disclaimer at the end. That's
okay. I have never invested in this company. I don't know the people who run this company. I just found it online. Someone sent it to me. It's actually Token Terminal, and a bunch of companies are starting to do this. And what they did was they took the DApp revenue and costs and all that, and they created it into like an income statement. So you almost have like a real-time income statement
from the token, like tokenomics.
They're tracking DApps, so they're tracking DEXs, right. They're tracking staking mechanisms. So they're tracking. So they had like
if there's a marketplace, like the fees, like on-chain fees.
They get all on-chain, right? So they're getting they're calculating the revenues based on what's happening on-chain, and they're putting it into like an income statement format. And I worked on a project called XBRL, which is basically, it was a way for when companies put their kind of reporting out on the quarterly side, it was this language that was basically like an HTML that would suck it into an Excel spreadsheet or something, so people didn't have to rekey the revenues and the profit and all that. And what was interesting is like, this is even more efficient. Think about this for a second. You could have, if companies ran their accounting systems on chain, you can literally have real-time revenue numbers, real-time loss numbers, real-time.
Yeah, that anyone can check out anytime, and there's no waiting for that quarterly report that can tumble the stock price up and down.
And there's no games. You can't play accounting games as much when you see it in real time, right? So I'm not sure if I'm for that or not, but I'm saying that the technology is there, both from Market Watch. There's this whole thing about Market Watch and watching the companies and watching the investors and the traders. You can do all of that. They do it now, but Chainalysis is doing this every day. And it's actually better than anything that you can do on the stock market side. So all I'm saying is that they should be embracing this technology, and they should look at this financial meltdown yet again, They should look at the financial meltdown as a call to crypto's not perfect, but the rails that we've built and the code can be utilized for the financial system in a way that would bring tremendous transparency and safety, so the government doesn't have to bail out the banks every couple of years.
Yeah, no, this is tremendous, and I think this is the crux of I think if the traditional the TradFi companies are not really willing to start adopting this technology, we might see banks and those offices go like really obsolete, and so this is credit today falling over 25%, barely struggling to keep alive. We know it in crypto as a rug pull or a shitcoin, but talking about Credit Suisse here, we are seeing a true meltdown in the financial system. And what I want to ask you is, what happens next? What's going down in your opinion? What can we see moving forward? I mean, this has been the picture for TradFi from April in 2007 to this. It's like, it's really going nowhere. So what I want to ask you is, what do you think happens now?
We should lay the Bitcoin chart over that chart. And,
right.
And I think Bitcoin it's our look. They don't have to. The kind of traditional banks don't have to follow us, right? Mm-hmm. I know more people from TradFi. I just got a call yesterday from a former CEO of a large proxy kind of solicitation firm, which is deals with issuers of public companies. He left there. He's interested in moving into the space. There's a tremendous amount of people who want to move into our space because they know, and especially younger folks too. You watch your parent, like my kids, they're in their so 20s. They've watched me go through the 2008 actually credit crisis. Now they're watching it happen, and they're older. They must be like, "What is wrong with you people that you cannot manage to keep the banking sector on track?"
Well, I think there's a large business model that is based upon manipulating valuations, moving money under the table, claiming that there's big deposits, favoring a bit of the insiders, and there's all it's been going on, I think, since the birth of the large banking system as we know it, right? It was always unfair, and the question is now that I think the big question that lies upon us is, now that we have a new way of doing things in the financial markets, thanks to blockchain technology and crypto, we still see that there are large players that can move markets. We've seen what a tweet from CZ on Binance does, and we've seen what a movement from Coinbase can do, and what's happened with the DCG and what's going on with Grayscale. All those things are really market movers. So the question thing here, and so is, do you? I think the next iteration of our financial rails and their financial infrastructure is going to be blockchain based. The question is it going to be fairer and kind of more,
That's a great question. I don't know. All I know is that the technology. So all I know is shining light. So in the best way to run a bunch of businesses or run an ecosystem is to have some type of transparency. So transparency is key. So, and everyone believes that, right? If you believe in transparency, then you believe in blockchain. Mm-hmm. Yeah. If you believe in actually transparency, and you know that the centralized system isn't motivated to be transparent, and then if the regulators are not doing their job for whatever reason, I'm not saying they're in cahoots with them or whatever, because the banking business from day one has always been the same thing. They have to take your money in, and then they have to redeploy it in order to make money as a bank. That's what happens.
Yeah.
But the problem is that the markets themselves they keep on doing like what the CDO, this is another version of like the CDO thing where you don't really know where it ends. You don't know where the contagion ends. You don't know who owns what, because it's impossible to manage. And I think that if banks should say, just if they put it all on chain, you could see the chain of custody completely. So wouldn't that be an amazing opportunity to be able to do chain of custody for every single asset, for every trade? And it's impossible to do with the current centralized system. Need a decentralized system in order to accomplish that. That's my only point. I'm not saying the banks are completely evil. I mean, I don't really care. I know, but they're not motivated.
Guys, just a quick break from our episode to tell you how much I appreciate you for being here and following the podcast. Now, if you're watching this on YouTube, please subscribe and like and share it with your friends. If you're listening to this, please take a minute to rate the podcast and give us a share. So I appreciate you very much for being here and keep enjoying your episode. The bankers themselves, people involved, they're not. I don't believe that people are inherently evil. But when don't blame the player. Change the game, and the game is just poorly designed, and it worked for a couple of 100 years, and it's been working. So far, it's not working anymore as greed and those things playing to the system. You need better, more evolved systems. Now, what do you think? And so it's going to take place. Let's assume, okay, let's try to look at the light at the end of the tunnel and say, okay, there's going to be some kind of management that backstops this. And as long as the governments still can manage to cover at least the deposits, then we'll kind of wither itself out of this. Let's also look at the gloomy, darker scenario where all regional banks start failing and having bank runs. It all consolidates into, the HSBC, JPM, or even the big banks start failing. That's a very, very dark and scary scenario for the entire world, even for crypto. There's no guarantee that because Bitcoin is now working as a safe haven from the banking collapse, that money will keep flowing into the ecosystem if people just run out of money to move.
So, that can never, so let's look at it this way. That can never really happen because that's the economies are built on interconnected economies. So, and governments as much as they want, but at the same time, they wouldn't, that would be insanity, right? That would be, if you take everyone's money and you say, oh, sorry, that's, government people want to stay in control. So, and that would not, I don't think that's an option, right? So I do think that they get the actual regional banks. I do, and they've already started doing that. But, I do think that they know that the regulation works a little bit. They also, they know that the regulations that they put in with Dodd-Frank did help, right? We know that. The issue is that you don't want to have, they kind of nationalized the banking system in the United States this weekend, right? Mm-hmm. They backstop everything, then they kind of like nationalize the banking system. Maybe banks should be a utility, like the power company or something. Like maybe they should be a utility. I don't think so, but there should be a type of product. Like someone was talking about this, a banking person. They were like, what they should do is they should have like an insurance product. But again, insurance products also have to be backstopped properly. So, but like you get your normal FDIC insurance. But then banks have to buy insurance for the other uninsured deposits. So they basically have to they have to pay into a premium, which cuts into so the banking sector as a whole, like on the return on equity for banking, it used to be like 70%. Now it's going under 15%. It's probably going to be like a 5% gain. And 5% gain, maybe that's okay. Maybe it shouldn't be, maybe deposits isn't where you're profitable. Mm-hmm. So what I think banks should end up doing is you'll have your deposit banking section very low. It's almost like stock transfer. It's a very low profit processing simplistic, maybe charge some service fees to customers, but it's simple. Then you have your more aggressive, you take potentially investment and you have like, you don't say we're taking the bank deposits and we're going to go invest in a hedge fund. You say, this is the separation. If you want, you're going to have your bank deposits and then you're going to have your risk assets, like the way they have it now. The problem is they were taking bank deposits and putting them in risk assets, things that weren't risky 3 years ago, but now have become risky. So it was like they were taking bank deposits and putting them in hedge funds and then saying, these aren't FDIC.
Betting on the resiliency of the system.
Right. So I think that if they take a step back, we'll get through this. But my like plea is, being someone who's been on Wall Street for a bunch of years and kind of worked in strategy in fintech, is you should just look at the rails. Look at what we've built in DeFi. Look at what's go look at DApp, radar, and go look at some of these things and be like, they're calculating in real time the revenue and the transactional volume, and there is no centralized system. The oracles are decentralized, and the oracles is funny. The word oracle is like a kind of consolidated tape, is what I tell Wall Street people. They're like, oh, I know what that is now. So it's like, like the ticker on the CNBC screen. I'm like, that's the oracle. Yeah. If you look at that's your oracle. So,
Enzo, do you foresee? Sorry, no, go ahead.
No, please.
Do you foresee that this might be the actual entry point for CBDCs? Like if governments say, okay, listen, because we needed to bail out all depositors, what we'll do is just, we'll switch you to this digital currency system that we've developed. We've been in the works for a few years now, thanks to the World Economic Forum and Carl Schwab and their whole "you'll own nothing and be happy" policy, where now you have this new money that it represents all the money you had previously, but now you have this, it's digital, and you have this app that, basically controls your life through this new currency.
I think CBDCs are going to come. I think that there'll be, I think that there'll be two sides of it. There'll be the side where they're going to see everything that you do, which in this country, Venmo, they kind of see everything anyway, and they'll just make rules. They'll say anything under, and anything under $10,000 is like, doesn't matter. They wanted to make it 600. I think they'll get rid of that. At the end of the day, if you don't want to use a dollar CBDC, you can convert it to a pair in something else. Do I think that all transactions will be tracked? It's hard to tell. I don't see how we avoid it. I don't know. I think most of the transactions are being tracked now. What I want to know is, what is the current amount of transactions that you're making personally and I'm making personally?
Yeah, and everything's being tracked anyway on the open public blockchains. It can be tracked by anyone, but the big question is it censorship resistant? Meaning, can they control what you spend on, how much you spend on, when you spend on,
I would not put it past, or this concept that I heard, which was really disturbing, which was like, how they gave out the COVID checks. Someone was saying that there's an idea where like in New York City, if you have like a Metro card or the Metro app, it expires if you don't use the money.
Yeah. So like that's what's happening with CBDC in China. That's happening now.
So they could literally be like, here's the money, but if you don't use it within the next 3 months, you lose it. And that is really disturbing in a way, because how do you save and protect yourself if you're like, I guess you won't be able to leave it in cash. You'll have to move it into something, which is interesting, because what they'll do is they'll really be able to drive the consumer kind of behavior. They could. It's a world I don't want to think about, but
yeah, no, I cannot see the bullish case for CBDCs, but it might be on the contrarian side there. But let's speak a bit about your investment thesis for 23. And so I'm really interested in your take on what are going to be like the trending narratives that we're going to see. Are we still going to, see things fizzle out, or is this really the kickoff of a new bull market? How do you see it both on the macro scale, Bitcoin wise, and the narratives that you're most interested in crypto?
So I'm actually pretty optimistic about the blockchain industry as a whole, or the Web3 industry as a whole. I do think that, I mean, look, I was listening to actually Mike, Novogratz was on a CNBC this morning, and I just thought it was interesting. He goes, we went through FTX, Terra Luna. I mean, he didn't mention Terra Luna, but Terra Luna, all this other stuff, right? And look at the resiliency of this kind of community. This community is very resilient, and it's because we were born out of the 2008 credit crisis. And we're just, I mean, if you look at Twitter, so many people, like I told you so, all the Bitcoin maxis are like having a party. But the funny thing about it is I think that this year will be one of those defining years in a way, potentially. Yeah. I think they're going to lay up a little bit on the attack on crypto. I think the Operation Choke Point actually ended up choking the financial system.
Yeah. Or at least, they're choking some American investors that wanted a way out, or I don't see how.
Well, actually, SVB was going to go down anyway. It started looking like there were cracks in the armor by Q4 of last year. So that was already happening. And but that's a very interesting, I do think that 2023 might be a defining year. So this is one of those, this goes back to that Gandhi saying, first they laugh at you, then they try to stop you, and then they join you. And I think we might be at they tried to stop us or slow us down, and then what happened is caused it unfortunately kicked into a contagion for the entire banking system and a questioning of the banking system, which I don't think they really expected. I don't know if that's, I'm kind of speculating here. I'm not really a conspiracy type person, to be honest with you. I think people just make, in most cases, I do think that the Operation Choke Point probably may have been, there's definitely a push against crypto in a very hard way. I think they may let up on that now. And I do think that they have bigger concerns than crypto.
For sure. Like we're talking about inside a echo chamber, but what's taking place, crypto might be the little, the little escape bulb on the boiling pan, right. But it's not going to open up the lid. If crypto might be a little steam off the pressure, but things blow up. There's not enough. I think I don't see if there's enough railways into crypto for people to really opt out of the system as it is today.
Well, what's interesting is they banned crypto in Nigeria, and this is, I don't have this as a data fact. This is something that I've heard, but it increased Bitcoin purchases by like
45%.
Yeah, like a ridiculous.
That was a premium that you were paying in Nigeria if you want to get your hands on a Bitcoin.
So what I think is going to happen, I think more people are going to get into Bitcoin now. I think all those people that are like, oh, Bitcoin's not, they're going to be like, well, maybe I should put some money into Bitcoin because so let's say the inflation on the US dollar is going to go up by 3 to 4% or more. So Larry Fink just said this session today from BlackRock, he thinks 4 to 6%, 4% over the next couple of years for inflation on the US dollar. That means that if you own US dollars and just leave it in the bank and hopefully no one takes it, you're going to lose basically the value of that is going to go down 4% a year, the purchasing power. But if you buy Bitcoin, you're more likely to, do you think Bitcoin is going to do more than 2% or 4% a year in growth? If you believe it does more than 4% a year in growth, you should put some money in Bitcoin. even if you don't have to put it all, but you
Mhm.
should put some. And as a fund, we're in altcoins that are like, we're focused on anything that's decentralized that can be decentralized. So we love the AI world. We got in really early in 2020. We got back in, and now in the last two months, we
You're
have
mentioning on LinkedIn you were invested in Singularity before that kind of the
yeah.
big jump.
I think that those guys, they're I mean, they've been in AI for like 20 years. I mean, they like invented AI, right?
It takes time. My thesis on the university was a musical sequencing system based on AI. And I remember my like the examining board, I passed that, I passed the thesis, but my advisor went like, listen, this is not really something. It's not really going to be like intelligence, and he kind of talked me out of the idea. 20 years later, and we're waking up the Chat GPT and going like, what?
Yeah. So I mean, I do think I think that, and anything like, as you track, which is Origin Trail, like 40% of all of the European imports are being tracked on this factory chain, which is Trax chain. They have knowledge graphs, right? These are companies that not everyone knows about, but they're listed on Coinbase. I do think that, anything that's Web3, like gaming and play to earn, is getting more and more fun. We just actually looked at a company that is the number one game on actually Polygon network. It's a fun play to earn game. Like, when play to earn started, the games weren't really that fun. Now they're becoming more fun. So yeah, I think that the financial lending business, the financial banking business, if they start looking at DeFi tech stacks and rails, there could be a very transparent bank that could open up someday.
So let's start summing it up, Enzo. You're looking into AI, you're looking into gaming, play to earn, you're looking into DeFi and Alpha Sigma. What else are you dabbling in, looking for, or you have a strong belief in within the Web3 space?
I think that's my first three. I'm always open to looking at anyone that wants to use these innovations that have been kind of developed to apply to other sectors. Like, I think actually healthcare is, and the identity. I know everyone's trying to do that identity piece.
Yeah, digital identity is like the holy grail for
the holy grail.
Yeah.
The issue there is that digital identity silos and wallets, that's the issue there. It's a little bit of a challenge. Like
well, let's define it as the interoperable digital identity.
Right. That's the problem. So
that's a mecca.
Right. So that's something that I think the healthcare thing is huge. I think if I could have a kind of digital identity that I controlled, and I had my healthcare records on there, and I went to a hospital and I could plug it in, and it's all there.
And you could choose which of your information you're delivering and disclosing. I think that's,
and then also shutting it off. Like if I don't want them to see it again, I can shut it off. So I love that idea. I'm like, I know someone's going to do it, and I know there are a bunch of people working on it, and I'm like just trying to keep actually close attention. But it's something that I think is a very big lift. It's the same lift as digital assets. I do think I am definitely going down the road of let's do digital assets for real world assets, at least in the US. Let's plug the exchanges together, the ATSs. Let's show that we can trade a digital asset with best execution. Like that's more of my space. So I am working with some companies to try to figure that out. Very, very new, again, you're trying to change Wall Street, which is like,
not a small feat.
Yeah.
And so listen, me as a founder, I've noticed how stringent and the tough the investment VC market has become in the last year, especially since last year's crash. What would be your advice to founders in the Web3 space to approach you guys to start to work on still getting funded? I know that for what we've talked in this episode, you're still actively looking to invest. So the door is not shut. So there are still, funds like yourself looking to invest in good projects. But what would be your advice or your top 2 or 3, points that you would advise Web3 founders and builders to make sure, you gather or you put attention on that for approaching funds such as yourself?
We like teams that have both business savviness as well as tech savviness. A lot of founders will be either tech savvy or business savvy. So if you're one, I would recommend finding the other. And so that's when you walk in the room, you're like, I got the business side covered, marketing, sales, so on and so forth. And I got the tech side covered, and whichever side you are. And then I would also say that just, this isn't, we like companies that want to build stuff, that build things. A lot of companies that we invest into, they build things really on a small budget, and they get things off the ground, and they start proving the model. And we like those companies because we're like, whether we're here or not, we know they're going to keep going. Like they're not looking, we don't like persistent money raisers. Like, the people who raise money for a project, launch it, it goes up, goes down, fails, they start the next one. And then they do it like 2 or 3 times, just rinse and repeat. And you don't really ever see a product that they've has gone to a certain level. They're more about themselves than maybe the investors. And that's the other thing. Respect the investors. I mean, we're not, it can't be one-sided. You have to really, if you have a token that's trading, that's out there, and you have a kind of community, we're part of that community, and you have to be kind of respectful of that community. I think those are probably the three pieces that I would talk about.
That's golden. And so founders, our audience, you've heard it, solid team with the both the business and the tech, being consistent on the delivering, and not going and chasing shiny objects, but actually building through and shipping. I think that is golden. So listen, this has been lovely. I think it's going to be super informative. I'm definitely going to try to put it out there as soon as possible because of the the relevancy that of what we discussed today and what we're seeing. But I want to thank you so much for taking the time and being with me. Where can people find you, and where can people find what you guys are building and investing on with Alpha?
So Alpha Transform it's a new website, so I don't know if it's
Alpha Transform, guys. Google it.
Yeah, just Google me or Google it, and I mean you'll find me. And then I'm on Telegram, and I'm on WhatsApp. I'm basically on every single major. I'm on Discord. Although I don't use Discord a lot, and I'm on actually Signal. So if you start somewhere, you can probably find me.
Yeah, definitely. So Enzo, this has been great. Thank you so much for being here. And guys, go check out Enzo, and also like this episode. And we're bringing you pure gold and the best people in the industry. So thank you, Enzo.
Thank you, Hernan.
Take care.
Awesome. Thanks.
Please keep in mind that none of what's said in this podcast should be considered financial advice. You are strongly recommended to do your own research and do not take anything we say in this podcast as a recommendation to buy or sell any assets whatsoever.
Thank you for listening to this episode of the Web3 Creators Podcast. Make sure you follow us on YouTube, Apple, Spotify, and all of your favorite platforms. And if you're serious about building your own Web3 business, head over to web3creatordojo.com and check out our courses. That's web3creatordojo.com. See you soon, creators.